a CEO and founder of Live Energy. It's one of the oldest energy brokerage firms in Texas. Okay, so they paved some of the way for energy in the energy industry, in the deregulation industry, right? And so I worked with St. Clair back in 2012. I went to work at his brokerage firm in October of 2012. And what happened during that time was that they were, you know, they had a very successful energy brokerage firm. They have like, I think at that time, I remember them telling me that they had like a 98% customer retention rate, meaning that the only time that the customers ever leave their brokerage firm was when the company went out of business or no longer, or had to relocate, and that's why they lost them as a client. But when I was there, they did an excellent job of customer service. They were always taking care of their clients really well, and he used to crack the whip on us whenever we didn't take customer calls immediately and take care of them, our clients. So when I was there, I saw that St. Clair and his business partner, Paul, that was running the place, I saw that, you know, they were making, you know, really good money there at the energy brokerage firm, and it just astonished me that they were worried about this Bitcoin magic internet money at that time. And I was thinking, like, why are these guys not focusing on their energy brokerage business, and they're focused more on processing these Bitcoin transactions? And, you know, since I was Asian, he was asking me, hey, man, you know anybody in Asia that, you know, can get us these ASICs chips? And, you know, I thought it was a joke, you know, because I was Asian, but he was being serious, like, hey, man, we need these ASICs chips and everything. And he had these blueprints, and that's all he would ever worry about every time we come into the office, you know. And I'm like, are these guys, you know, and I saw how he dealt with his customers there at the energy brokerage firm. So I knew that he was not, you know, somebody that was BSing, you know, like he's legit. So I said, hey, you know what, maybe they're onto something here. And I remember making fun of Paul, your business partner, one time about these, you know, you guys worried about this magic internet money. And I remember Paul saying, you know what, quit being stupid and go read the Bitcoin white paper. You know, and he goes, quit, you know, being ignorant and go learn what it is before you start talking out your butt, you know. And so that's what I did. I went and read the white paper, and I read the summary, and I really liked it. But I couldn't understand all the math and the computer science, so I had to send it to my business partner, leonfu.com. He was a real Asian. He knew how to read all that computer code and the math and everything. And he came back and he told, when I called him up, I said, hey, I asked him, hey, give me the reasons why this is a scam so that I can go tell St. Clair and Paul to leave this stuff alone. And instead, when I called leonfu.com, he said, hey, I went and bought a bunch of Bitcoins already. You need to buy some too. You know, and I trusted Leon. And so that's how I got into Bitcoins, was through St. Clair. And, you know, there's things that, you ever been to meet people or go to work at places or see things and you're like, hey, why did I do that in my life, you know? It was completely off of what I normally do. You know, I'm not in the energy industry, and here I am working at an energy brokerage. What the hell am I doing here, you know? And that was like, you know, the best thing that ever happened in my life, you know, because of that, now my family is financially free because I learned about Bitcoin through his energy brokerage firm. So everybody please give a warm welcome to St. Clair, right?
So yeah, it was very interesting having Ty as an employee back in the day. We always appreciated his entertainment when he came to the office. Yeah, so back in 2012, I got interested in Bitcoin primarily because I realized the correlation between energy consumption and mining. Yeah, I may need to get back here, but yeah, so I got interested in Bitcoin because of the mining aspect. And actually, one day I came to the office, and Ty told me that he had booked me to speak at the first Bitcoin conference in San Jose. And I didn't ask Ty to do that. He just did that on his own. And so I went and spoke about managing energy as a miner, which was, at the time, still wasn't a big thing that people were thinking too much about because it was pretty profitable and you could mine with pretty high electricity rates. But I went to San Jose, made some interesting connections, and was actually able to source ASICs. And so we ended up building some hardware in 2013 and 14. And so it's been an interesting ride. We never, back then, Ty got so interested in Bitcoin that he went full bore and has done that full time. Sometimes I think I would have been better served if I had done that too. but I didn't. I stuck with the energy brokerage business. So for the past 16 years, our primary business is helping commercial and industrial buyers in North America, a little bit in Canada, buy electricity and natural gas. So Ty called me and asked me if I could come and just comment about what's going on with blockchain in the energy space. So what I want to do today is just touch on a few of the topics that you hear in a lot of these ICOs that are coming out, and mention a couple of the use cases and what problems they're trying to solve. So the energy sector has seen very little innovation over the last 100 years. Most electricity grids are still based on massive centralized power plants. And if you look at the electricity grid today compared to 1950, it's pretty much the same thing. Not much has changed. Historically, data has been very closely guarded, difficult to access, and it's very difficult to process. And so there's not been a whole lot of innovation to date. The power players that have built the current system have spent the last 100 years building a system that they can make money with, and so trying to change it is very difficult. They're resistant to change. And when you look at any energy market, there's a handful of players. Texas is just one example. They're not all the same, if you go from here to Europe to Africa, but generally you're going to have the same players regardless of what market you're in. So in Texas, and it's important just to understand who the players are when you think about projects that have to do with blockchain. Who are the players they're trying to disintermediate? Do you really have the power to do anything? And is it a war that you can win? So you've got generators. Those are the parties who actually convert natural gas or coal into electricity or run wind farms and solar farms. You got transmission and distribution service providers. Those are the entities that control the grid. They maintain the poles and wires and provide open access to the participants. You got retail energy providers who provide wholesale supply, who they procure wholesale supply from the generators and sell it to retail customers. Reps are the entities that you buy from as a commercial or industrial consumer. You've got the independent system operator, which is kind of like the big brother that manages the system. In Texas, ERCOT, the Electric Reliability Council of Texas, they're responsible for ensuring reliable electricity on the grid. They are basically overseeing hundreds of power plants, making sure that there's enough power scheduled today to meet the demands for tomorrow. They also perform financial settlements in the competitive wholesale market and are responsible for administering the switching of accounts, so when you switch from one retailer to another. Legislators make the laws, regulators implement the law and regulate market activity and protect consumers, and the end users are the residential and commercial consumers of electricity. So those are the players in any given market. So some of the promises that we see that people are making having to do with blockchain. One, for example, there's a company, Grid Plus, and I mentioned them. I really don't want to get into mentioning ICOs specifically. I mentioned them because they're coming to Texas, and they just applied for their retail electricity provider license. So they're one of the first companies that are doing really interesting stuff with blockchain that I think probably has a shot at actually gaining traction and doing something interesting. The problem, or at least one of the problems they're trying to solve, for retail electricity providers, credit, billing, and settlement is expensive and represents a significant portion of the rates customers pay. And since reps extend credit to all of the customers and some of those customers don't pay, this bad debt expense is passed on to paying customers in the form of higher rates. So as a retailer, you've got a bunch of customers. There's some percentage that aren't going to pay their bill every month. The retailer basically is paying for the credit and the bad debt, and they pass that on to the customers that do pay. So the solution is to create a rep that limits its services to customers willing to prepay for electricity and automate settlement. Accounts must be funded with cryptocurrency in advance. Settlements are performed in 15-minute intervals and cleared via payment channels. Elimination of bad debt translates into lower rates, giving the rep a competitive advantage. Internet-enabled device acts as a smart agent that performs procurement without the customer having to understand the underlying technology. So it's kind of interesting. They've applied for a rep license, and one of the first things that they want to do is just go out and get customers. And the offer is that instead of you paying a higher rate because you're in a pool of people that aren't paying their bill on time, We're not going to take any of those customers. We're only going to take customers that are willing to pre-fund their account and have a smart device in their home that makes payments in real time. So as you consume energy in 15-minute intervals, it clears transactions using uses a token that they've created. They're still working out some of the details on that, but it makes sense. And it makes sense that if you can essentially disintermediate a credit component in the cost structure, you can be more competitive. So the technology involved there is blockchain, payment channels. I'm not sure how they're going to solve the issue of having all these transactions, because they definitely have to happen in real time. And if you tried to do something on Ethereum or Bitcoin, the processing time is not really going to support their model. So they've obviously got to have a payment channel solution in there. I think they may be using like a Raiden network or something like that. Stablecoin is part of the mix, because you can't really have people funding this smart device with Ethereum and the price goes crazy, and then they have trouble paying their bill because they lost value. Cryptocurrency, smart contracts, and an in-home device. So the promise, obviously, is lower cost through a more efficient blockchain-enhanced business model. To me, this is one that actually does make sense, and this is really just the first part of their business plan. They'll actually, a big part of the second phase will be peer-to-peer energy trading. Grid Plus. So the challenges they'll face: scalability is going to require successful implementation of a payment channel solution that I think that they're still working on that, and creating a new class of hardware. So the device that they're developing will actually hold the private keys, will sign transactions and make payments. That's something that customers aren't used to having, and I think that's probably something a little bit intimidating. But they seem to be smart enough to basically have the attitude that they're not trying to create something where anybody has to know anything about cryptocurrency or how it works. The promise is you're going to get lower or cheaper electricity, and we take care of the rest. That's it. So blockchain promises an improved renewable energy credit market. A renewable energy credit is essentially what you get issued when you have a renewable generation asset. For every megawatt of electricity that you create as a renewable generation asset, you get issued a credit. Those credits are tradable, and they can be sold to any counterparty you want. So but the current problem is that when renewable energy credit is created today, it's the result of production data being recorded on site where the solar or wind resource is metered. In some cases, production data is estimated or projected using formulas that can be manipulated. The data is then submitted to a third-party registrar where data is logged and a certificate is issued. Then a series of intermediaries act as market makers who take fees for connecting buyers and sellers. Additional validation is often performed each time a new transaction occurs. So you've got these wind farms that are logging data. The formula is used to validate that they're actually producing the energy that they say they are. It's not totally uniform in any particular market. There's different technology that's used, and there's a lot of room for error and manipulation. So the solution is to create an open platform where meters write production data directly to a blockchain and issue renewable energy credits to the asset owner of record. Buyers and sellers could theoretically trade and transact through a blockchain-based rec market as easily as we currently trade many existing tokens. So think like ERC20 tokens on Ethereum. If you've got a system where the producers are all writing to the same blockchain, you basically can disintermediate a bunch of players that are involved in the data logging and validation of the credits, and then create a market where parties can trade without going through an intermediary. So again, that makes a lot of sense. The challenges are creating the liquidity necessary to have a viable market. It's going to take time and a lot of money, and many of the existing players are not necessarily interested in more transparency or simplified markets, because that's likely to reduce the profitability. If you make things very transparent and very efficient, there's no need for brokers that are making good money trading RECs right now. And it seems like every energy-related ICO says they're going to revolutionize the REC market, and that's just not possible for everybody to do that. But maybe somebody will. Improved demand response markets. So what is demand response? It's paid curtailment of electricity consumption by end-use customers in response to system demand or per the terms of a bilateral agreement with a counterparty. Demand response is primarily used as a balancing tool by ISOs, but could also be used by reps. So let me just state the problem here. Load growth, so the reason we have demand response is that load growth is outpacing generation in many markets throughout the world. There's not enough new big power plants being built to keep up with growing demand. Demand response programs are one of the primary tools that ISOs have at their disposal, but they need much more participation. Currently, price discovery is difficult, and most deals are inefficient bilateral trades. Tracking performance is costly and inefficient. So in a market like Texas, 10 years ago, we had pretty significant reserve margins, so we had like 20 or 30% in excess capacity throughout the market. The load growth, we continue to grow every year, so we've got more consumption, but we don't have a similar amount of new generation being added to the Texas market. So the margin we have, the reserve margin is shrinking. So the system operators, they've got to figure out, they've either got to create a market where they incent people to build generation, or they figure out, they use programs like demand response, where instead of being able to call up more physical resources, they can call on a customer to curtail. So let's say we've got a 100 megawatt plant that goes down in North Texas. The ISO would use a demand response market to call up 100 megawatts of load to turn off. And so there's a market where customers will get paid if they agree to curtail when they're called upon, because the system needs the capacity. So the solution here, and basically the way that happens right now, you have it's a very fragmented market. There are certain programs that you can bid into. They're not really easy to navigate as a customer. And so usually you have guys like me who are brokers. I'm going out there and having to explain to the customer, here's how this works. Here's all these different people who will pay you these different amounts according to different formulas for you to participate. So it's really, it's not a very efficient market, and it's not real transparent. There's not a way to go and figure out what is it really worth to me? What's it going to be worth? So potential solution is an open blockchain-based market that would enable price discovery, increase participation, and make trading among market participants more efficient. A more robust market should help ISOs solve balancing issues. Increased liquidity should improve efficiency and bring down costs across the market. And putting performance data on the blockchain will drastically reduce the cost of administering the program. The other component that's kind of tough is when you get called upon to curtail your load. The program that calls on you to do that has to go back and validate that you actually did it. So they've got to go back. They've got to look at your historical usage data and validate, did they actually curtail when we said they did? Are they allowed to continue in the program? And so there's definitely a lot of room for performance there, and that's one of those areas where it just makes good sense that if you had everybody writing to a public ledger, you could easily, basically in real time, validate performance. So that makes sense, and there's a handful of companies out there that say that they're trying to solve this problem. And then the big one that actually I think it will have the biggest impact and is the most real, like I think it's definitely going to happen, is peer-to-peer energy trading. The problem, distributed energy resources such as solar panels on businesses or homes generate excess capacity that is currently not monetizable and effectively unusable because there's no mechanism in place to facilitate local trade. As energy storage systems become economically viable, the economic opportunity that peer-to-peer trading represents grows significantly. So this is the duck curve, and what you see here is that's the shape. That's 24 hours in a day, and where you see the spike up there, this is right up there. That's the point where the sun is shining the brightest and producing the most energy through all the solar panels that are deployed. So every day in markets like California, markets like Texas, are the solar penetration is not near what it is in California. But in California, it's a really tough challenge because they've got all this solar installed, and hour 18, massive spikes in production And that requires the system operator to have to essentially balance that. So for every megawatt of solar that's online, you've also got to have the same amount of coal-fired or natural gas-fired generation, so you can balance it. You can't have the solar just explode and blow up the market. You basically got to have other resources that you can cycle down. And so with peer-to-peer energy trading, and particularly when we get this next generation or the generation after that in terms of batteries, when batteries start becoming economically viable for people to put in their houses, it's going to change the game, because we can essentially charge the battery instead of all that energy just flowing and creating this massive spike that's really hard to deal with. You could store it in a battery, and then throughout the day you could have an autonomous agent that goes out and decides when it wants to offload that power. You could literally, and in fact, that's like Grid Plus. That's one of their, that's one of their stated goals. Like many of these projects, is to facilitate peer-to-peer energy trading. There's been some projects like the Brooklyn microgrid where they've done some proof of concepts and validated that it works. But if you just think about as simple as if you've got a solar panel and you work during the day, but your neighbor doesn't have a solar panel and they're staying at home doing laundry and running appliances, you really don't need that solar in the middle of the day. And if you had the ability to sell it to your neighbor and get a fair market rate for you, it would have a huge impact on the electricity grid. So the solution is to create a blockchain-based platform that combines a distributed ledger for the purpose of logging data associated with energy production and consumption, tokenization of that capacity so that standardized units of energy can be traded and settled through smart contracts, and stable coins will probably be needed to eliminate currency risk. You've got blockchain, payment channels, cryptocurrency, stable coins, energy storage via battery, and smart contracts to facilitate this whole process. And so there's peer-to-peer energy trading is kind of like the holy grail that people feel like when we get there, there's so much inefficiency in the electricity grid. So we're kind of on a trajectory where we don't seem to have enough new generation coming online. But if we can just create a system where we can more efficiently balance by allowing people to trade with each other, it should go a long way to solving our problem. And the other thing that's important about peer-to-peer energy trading is there's a way for the current power players to make money with it. So whenever you consider some of these things, the idea of creating a system where you're going to disintermediate companies that have been around for 100 years and are worth many billions of dollars and have solid grip on the levers of power, I don't know that's going to happen. But this is the kind of stuff where there's a lot of ways for people to win that are currently in positions of power. And then just in general, there's a lot of interesting things that I think will happen as a result of data logging to open blockchains. The problem currently is that all data associated with energy production and consumption has historically been hidden within data silos, controlled by private entities and governments. The lack of publicly available data limits market participants from making smarter decisions and inhibits optimization of energy markets. Asset benchmarking and valuation is difficult. The solution, wide-scale adoption of blockchain by industry consortiums, energy producers, and energy consumers that will create a massively more transparent view of the entire energy ecosystem and create better business models in the near future. Examples would be large generators voluntarily publishing to public blockchains, opportunities for both companies and individuals to contribute valuable data while maintaining anonymity already exists. Energy Web Foundation, that's one example of an organization that purports to be working in this direction, and there should be valuable market-enhancing insights that are the byproduct of profit-driven initiatives. All that's to say, there's a handful of projects that are basically out there trying to either tap into what have historically been private data sets that are being published and kind of pulling them into public blockchains so that people can do more interesting things with them. Like, for example, getting generators to agree to post their production in real time. So if you have if you have a view of what's going on in terms of the generation and a network, and you've got public access to it, there's interesting things you can do with that information. The data that an individual that's associated with like the consumption of an individual is usually pretty closely guarded, but there's people that are working on projects to basically allow individuals to contribute their data so that that can become part of a public data set, so you can make smarter decisions about investing in new assets, generation assets, or creating other programs where you can make the market more efficient. In general, things to consider when analyzing blockchain-related projects, I definitely think that there's like way more shitty energy-related ICOs than ones that make any sense, particularly ones that talk about needing to raise money to build wind farms and all this stuff. There's no shortage of capital out there to go out and build wind farms and solar farms where it's economically viable. So like half the ICOs that I see that talk about energy are talking about this pie in the sky, philosophical view of renewables and stuff that just doesn't make sense. But there are some interesting projects that absolutely do make sense. I think on any of them you got to consider the user experience. Basically, will the proposed solution make the user experience more or less complicated? People will, there's all kinds of ways that I know over the years that I could save people money, but if it was one little bit more complicated, they weren't going to do it. So I think anything that's more complicated than the current process is going to be a tough sell. Does the success of the proposed solution require a user to understand the blockchain? I think that there's a handful of projects that assumes people want to make their lives more complicated and want to involve cryptocurrency in a process where it just makes no sense. Disintermediation, obviously, you got to consider, where is disintermediation occurring, and will the players being disintermediated allow it to happen? In Texas, there's a handful of people that basically control the market, and if they're not in agreement with what you want to do, it's not going to happen. Period. Open versus closed models. Be wary of companies building proprietary systems or walled gardens. There's a lot of companies out there, or ICOs, that they talk about this fancy stuff they're going to do with blockchain and whatnot, and then you get to the end and it says that everything they're doing is proprietary and they're going to create this closed system and they're going to monopolize the market, which to me that makes no sense whatsoever. In my opinion, the most powerful ideas are those that are unlocking massive value through open systems. The systems, I think there's a lot of projects that make complete sense, and they are basically going to unlock a lot of value because they create open systems and allow people to share data and do things that we couldn't do because we weren't sharing data and we just didn't have access to it. That's what I have to say today. Hopefully you learned something about energy. Oh, sure. If anybody has any questions about ties past or anything else, you let me know.
If so you're a brokerage, correct?
Correct.
So if the peer-to-peer trading, energy trading is successful, does that take you out?
No, because the thing that I know is that customers, people running, we do only commercial and industrial, and to me, I'm interested in it. I'm very interested in that. Actually, I'd like to see some projects succeed in Texas, and I know that historically, my customers are never going to go out and do that themselves. They're going to say, hey, how do we participate? And they're going to come to me, and I'm going to help them just like I do with their standard transactions. It's more complicated than just buying the commodity, so I can't see them making a decision to go around me. I can see them, that's just the way it is. With the vast majority of all commercial and industrial deals are done through brokers. So I don't see it really having an impact on me.
What are your thoughts on Power Ledger? Have you heard of that?
I think the one thing I don't understand about them is it feels like they may be of the impression that they can build a walled garden. I mean, to me, if that's your approach, that there's way less value in creating a walled garden in a proprietary system. I could be off on that, but it just kind of seems from a high level that may be the angle they're trying to take. But I could be wrong.
If the current, brokers and infrastructure is already set up, and the solutions being pitched to solve on the blockchain, why would those businesses, for you, for example, you just said that, well, they wouldn't do that, they would just go to me, the broker. What would be the benefits of using the blockchain for the businesses in the industry? Because you said it's controlled by a very few handful.
Mhm.
So why would they even let them? Because it's their grid, they own it, right?
Well, the grid is not. The grid is basically it's a public utility. So they're like in Texas, we have open access. Anybody that wants access to the grid has access. You have to let anybody who wants to become a retailer come and set up shop, get a license. You can sell power on the grid. You can buy from wholesalers. You can bill customers for it. You can make your margins. So the grid is always going to be a public utility. It's kind of like having a development toolkit. That's the foundational layer. Everybody can come into Texas because it's a deregulated market and build any business model they want. Me and you could have an agreement to structure a contract to buy electricity or sell your capacity or demand response. Anything that me and you decide we want to do, we can do in Texas, and we can clear it through the grid.
Okay. Yeah. Thanks.
Which is why Texas is a pretty interesting market for projects to happen.
So once you put a billing and metering system into the household, the concept that the household has money is an interesting extension. So do you see other applications of that household money from a utility perspective
Yep.
than power?
Yeah, for sure. So, if you're successful in getting a piece of hardware in a home that has some wireless capability and is attached to an iPhone app, for example, and has the ability to sign transactions and make payments, you can apply it to energy, but you can apply it to anything else that you're paying for as a service provided from a third party.
So how do you think about the openness of that device as far as third parties, other services, et cetera?
Well, I know that with respect to Grid Plus's device, they've got some pretty advanced thinking in terms of using multi-sig and protect. Because basically, what they don't want is for customers to have to understand what a public and private key is, and to have to worry with managing it and risk losing funds. I don't know exactly how they're solving that problem, but I know that I know that they've put a lot of thought into having a process with multi-sig where it's 2 of 3, and they basically got ways to protect the device. So even if you took the device, just like if you stole a Ledger Nano, it would be difficult for you to actually extract the public keys and steal from the device. If that answers your question. All right.
Okay. Anyone else? Any more questions? No?
Thanks.
All right, everybody gives St. Clair
Appreciate
a
it.
hand, guys.